We got a hanging man candlestick today, but and candlesticks mean nothing unless you get confirmation of fall through. We had a hanging man candlestick back over here, and again, we saw momentum flip bullish with that, and it never got the fall through. It got a confirmation, but there was no follow through to the downside, and the momentum remained bullish. So again, candlesticks are important, but they're meaningless unless they get the confirmation and follow through. Pointed out, we bounced up the 50-period moving average here after back testing here, successfully back testing. We got that higher low scenario, bounced off the 50 here, the 200 in the 60-minute time frame, and we also got that 20 and the 10 now holding above the 50. They're still pointing higher. So again, even if we pull back, again, I think it's just a pullback, a pullback that actually be followed by new all-time highs. Again, I remain bullish on the S&P 500. Momentum remains bullish here, but again, I'll tell you about the candlestick because it showed up. Continue to be bullish. Again, like I was bullish ahead of the election over here. Told you about the bounce over here off the 50-period moving average, and bullish divergences on the 60-minute chart. And over here, again, off that 2023 trend line. Again, this is just chop and slop. I want to make sure you don't lose sight of the main movement, the big picture, because I'm still bullish, still think, again, this bounce holds on the January low. The NASDAQ pushed up again to higher levels today. We had broken just slightly above the previous peak, 22, 133, I believe that peak was right there. And again, we're just moving above it. And we get a doji today, another candle of indecision. So just some candles to be aware of that might give us a pullback. We got this gap right here on the NASDAQ right here. So again, that 21,700 area. So we'll be watching what becomes of the doji here. What becomes of the possible hangman? Are we breaking out to where we're going to push on up through and hold above those levels and consolidate? Or do we pull back into the trading range? Going higher? And again, we just flip the bars back to reflecting the trend here. We do start selling off. Again, a lot of people are going to be going double top. And again, it's what I'm watching is now that NASDAQ's broken a new highs. Go up and hit that upper channel in the weekly time frame that I've been talking about. Or boundary, I should say, the rising wedge. Now, in the weekly time frame, NASDAQ is seeing the MACD histogram go into positive territory, and again, getting a larger diversion, as I talked about. It might peak before the S&P peaks. Here, with the linear scaling, this trend line right here that we just came shy of, we still may try to reach that level now that we're moving to a new high. Even if we pull back, we bounced off our 20-week moving average twice now here in the weekly time frame. So a trend line I'm watching here with their linear scaling. Let me show you the log scaling. Here we have, with the linear here, we have going back to these peaks right here in the downtrend connected to the July peak. And we fell just short of that area here with our linear scaling. Here at the log scaling, the trend line's higher for NASDAQ. And again, just something to be aware of here if the rally can continue now that we're trying to break above the previous peak. We had this rising wedge. We broke down. We kind of back tested it, and then we're just now back up testing this high right here. So if we can continue the rally, I'm going to be watching both the trend lines here with the log scaling and the linear scaling over the next 4 to 6 to 8 weeks. Because if we do rally into March, market try to peak in March or on into early April, a rally ahead of the tariffs, the announcement of the tariffs being implemented, we could try to go higher to complete the blow off top. So again, moving to a new high, we'll be watching to see if we can breach some of these trend lines in the weekly time frame. Sometimes NASDAQ peaks ahead of the S&P. Now, if they're both moving to a new high, we still may see NASDAQ peak ahead of the S&P. Sometimes they diverge. It doesn't always happen that way, but sometimes it happens. I'll show you those trend lines in the weekly time frame with our log and our linear scaling here for the NASDAQ. Again, we've had a 4-day winning streak on the NASDAQ. We get a candle of indecision in the form of a doji. Could we pull back? And if we do, we got our moving averages all pointing up in a bullish arrangement there. So again, the short-term price fluctuations may give us a short-term pullback, but again, the break to new highs, we're probably going to go higher now, and that's why I'm showing you those weekly charts, the trend lines in the weekly time frame. I have drawn this trend line right here, this blue trend line, and again, this is from the low here that we had January. We predicted that we were going to bottom and bounce. We did, and then that was from the August low, and this is from the gap lower over here connected to this level. I've just drawn a channel. I'm just looking at this. Obviously, we had a rising wedge. It broke down. It back tested. And again, we've just had a lot of choppiness. So again, it's not given us a major reversal, but just a sell-off that possibly has given us now a new channel or something else. And then we have a trend line from the July peak. I cut it off there a little bit, but from the July peak, we have another trend line to be watching for the NASDAQ, along with their trend lines in the weekly time frame. I pay attention to these trend lines. That's how I recently called the January low, because I expected a bounce off of that because I was looking at that, and that was right where the election gap fill was on the S&P. So here's a possible channel. Please support the channel. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. If you could take a moment to partner with me, I would really, really appreciate it. Just put out all the information there, charts I look at every day, and just ask that you what you can to help out. I ask that because I don't get sponsors. Most YouTube channels are sponsored, and they constantly contact me, and I don't want to do it. I don't want to sell stuff. Rather than doing that, I just ask that you do what you can to help out. I need to hear from you in order to make that work. If you could take a moment to do that, I would really, really appreciate it. I thank you for your consideration for that. Volatility is remaining contained, and again, eventually we're going to see another spike in volatility, but my guess is that we're not going to see it until we finish the blow off top. Again, I remain bullish. I think we're going higher. Get distracted by short-term price fluctuations. Again, I predicted that pullback through the January peak, and now we've got chop and slop. Don't get distracted by that. Day traders sort that stuff out. Main movement is we're still going higher, even if we get pullbacks along the way. Got these candles of indecision in the daily time frame. Maybe we get some pullbacks. Pullbacks we'll be watching. But again, that would just be a detour on our way to the upper channel line on the weekly chart and that upper boundary of the rising wedge I've been talking about every single video. So again, volatility remains low. So again, I think over the next 4 to 8 weeks, we're going to be making our way into probably late March or on into early April, where I think you're going to see prices up at the levels that I'm using as my price targets, those trend lines, taken sweet time, going nowhere in November, December, January. Now here we are into February, going nowhere real fast. That buys the market more time to reach our objective target, the trend lines. But don't get distracted by short-term price fluctuations. Look at the main movement. Where are we headed? In my opinion, that's higher. Remain bullish. We'll be watching tomorrow to see if the FOMC minutes moves the market. That gave us a pullback. The Fed's been pretty hawkish. They gave us a pause. We got a hawkish cut in previous meeting, and then we can now get this pause. We'll be watching to see how the market responds to those FOMC minutes. They end up giving us some kind of pullback. Possible that they do, because again, the Fed is hawkish, concerned about inflation when they should be concerned about the recession, as I continue to warn. You know, we've gotten a delay of the recession because of the artificial government spending, government deficit spending. We spent almost $7.5 trillion in 1 year. 2.2 trillion of it was government deficit spending. That's why we're going to have more inflation. But, the money supply is also being increased. But again, we're seeing a reduction size of government, and Doge is taking a wrecking ball to the government spending. It's been artificially propping up the economy is now being removed. So just keep that in mind. Again, this is opening the door for recession to begin. The 2024 2.2 trillion in government deficit spending artificially propped up the economy, and it's now going to give us inflation. And the narrative is going to be that the inflation is rising, so the Fed can't cut Market will get an inflation freak out. The CPI will begin to tick back up as I've been predicting. We're already now seeing that. We're also seeing with the shrinking of government, we're seeing now a very, very attractive buyout for government employees to reduce the size of government. Thousands took it. After that offer expired, now we see mass firings of thousands of government workers. The Trump administration is downsizing and reducing the size of government. This is eventually going to show up in the jobs report. Eventually, we're going to have negative jobs. See a negative jobs number going forward, either just before the recession or as we move into recession. Just as we saw the government deficit spending artificially propping up the economy, BLS has been artificially propping up the jobs report, overestimating jobs and then revising them down later. We really start to see some weakness going forward in the jobs reports. BLS likely go in the other direction now and make the data look much worse. So I expect those jobs numbers are going to start turning negative here in the not too distant future as we move towards recession. BLS is too busy trying to shape public opinion rather than giving us real economic data. For the last 2 years, they've given us nothing but fake numbers there with the jobs report. Okay, we had the Dow up 10 points, pretty much flat there. We had the S&P up about 0.25%, up almost 15 points to close at 61.20, well, 61.30 rounding up. Let's just round it up there. NASDAQ was also flat like the Dow. Russell was up just under 0.5%, and the VIX was down just over 0.1% to close at 15.35. Again, the market was closed for President's Day in the U.S. Here we have a short trading week tomorrow, Wednesday the 19th. We will get the FOMC minutes during the market session. We will get it at 2 p.m. Eastern time, so that will reflect the last meeting where we got the pause out of the Fed, and then later in the week, we got a lot of Fed speakers. We're going to get leading economic indicators already predicting a recession. I've talked about that indicator before. We have manufacturing PMI on Friday, and then we have existing home sales and the final number for consumer sentiment. Fed speakers for the rest of the week. So that's what's going on our short trading week. Tomorrow, probably the biggest news all week will be the Fed minutes. That hopes of the tax cuts. Now, the extending the tax cuts in 2017, I think gives us this rally. This doesn't include the tax on, or I should say, it doesn't include the no tax on tips, the no tax on overtime, and the no tax on Social Security, those middle class tax cuts. Rich people don't work overtime. Rich people don't get tips, and rich people don't live off Social Security. Those are the middle class tax cuts. Get those later in the year, and I think that will be part of a counter-trend rally, as I've said. The extending the 2017 tax cuts, I think, could help the market. And remember, election rally, Wall Street likes Trump's economic policies, but they hate his tariffs, so we'll probably rally on the hopes of the tax cuts and then sell off and top with the tariffs with an inflation freakout. That's what I think is likely going to be the case. Later, there'll be other things. I think we'll get a black swan event with the sell-off. I think we'll end up getting a black swan event later in the year, first quarter in 2026, which will be the banking crisis happen after the recession already starts. I'm watching this on the weekly chart, and again, we start the week off positive. Again, a pullback. We're in this minor wave 5. I think we've got the first two subwaves done. I think we're in the subwave 3 there of minor wave 5. And again, the 5-leg push higher here. I think we completed minor wave 4 with the January lows. I talked about that's why I told you the head and shoulders pattern was a fake pattern. Again, I think we push on up in here and then we peak. We complete minor wave 5, completing the 5 waves for intermediate wave 5, and that's a 5-way push of down over here, and the whole thing, all 5 intermediate waves make the primary wave 5, completing primary wave 3 and 4 over here, and then 5 over here, and then you get your top and the reversal with the multiple point negative diversions. And that's why I still think we're going up to this channel line complete the blow off top. We have gone nowhere since November. We have gone absolutely nowhere. We've been going sideways here. Whoop, I didn't draw that very well. We failed to reach the upper channel line at the with the November, December rally, and then the January rally that we had. Now we're in February. Sideways movement has bought the S&P more time to complete the blow off top because we went sideways. I believe we're going to the trend lines up here. A number is not my target. The trend lines are my target. The longer it takes to reach them, which now it is, the higher the target goes. The sooner you reach them, the lower the target is. So again, we're watching the trend lines. That's where I think we're headed. And then when we get there, but he's going to think it's a top. Get few people, but the majority of investors and traders be complacent and will not believe it's a top as see at other tops. At the top in 2022, just like at some of our more recent peaks where we were told there's no way we're going down, and yet we did. You know, we got the December sell-off and the July sell-off. Nobody thought those were short-term peaks at all. They were. As we reach these levels, again, we'll be back at these levels for years. Again, the valuations, I talked about the valuations over the weekend with the Buffett indicator, Shiller PE ratio. Again, these things, these valuations are telling us that, hey, we're going to have low returns for the next 10 years. Meaning you're going to have a crash or two. You're either going to have low returns and negative returns. That's what the signals, the high valuations are telling us. The stock market is more overvalued right now than any other time in history. Yet it's not in a bubble. 2 years into the new bull market. This is coming from the people that told us, calling the 2022 sell-off a bear market, and that is people that told us it was never going to happen. Continue to be bullish, believing here in the weekly time frame we're going higher, but then I think you're going to top, and depending on how high we get there, how fast we get there, how high we go. It could be into the 63, 64, possibly 6,500 area, depending on when we reach this area. We took a detour and we went sideways for many, many, many weeks here over the last couple of months. That's going to take the S&P higher. That doesn't mean I'm going to top. Before the recession hits, about a month or two before the recession begins, the S&P will peak. Begin to price it in. Bitcoin, I told you Bitcoin has a positive correlation. It's got the same channel as the S&P, and it's likely going to move up there. It's consolidating sideways, the same as the S&P. But you know, one thing Bitcoin, here's a channel, and we got accumulation going on with Bitcoin at the January low and at the low with the sell-off with the tariffs there. I think Bitcoin's going to go head up to this area here, and I think the S&P is going to do the same thing. And then I think they're both going to top and begin to price in the recession. But one thing Bitcoin has, and I remain bullish on Bitcoin, but one thing Bitcoin has is something that's suggesting that the market and Bitcoin might peak around late March or on into early April, surrounding the tariffs, rally with the tax cuts, or maybe other economic news, or whatever the catalyst may be. Hopes of not having the tariffs be as bad as they could be, or whatever the catalyst may be. Look at this again. Watch my Bitcoin videos. My latest one at the end of this video. Pretty fascinating because the correlation between the S&P and Bitcoin have been pretty remarkable. Notice the period here, the seasonality from April to September, you tend to see a lot of volatility with Bitcoin. Now here we had volatility, a 55% drop in a recovery for a larger topping process. Here, look at this. I mean, the bottom just fell out of Bitcoin here from April to September. This is all April to September. That's why I'm saying the coming April or March, late March, we could see a peak. Over here, April to September, you had the sideways move. Over here, you had a peak in late March, and then you had all the volatility from April to September. Do we get it again? And again, if you look at this, January to March, you tend to have volatility in January and February, or sometimes either one or the other, and then you end up going higher in March. Same thing over here. And this is just more recent with the January, February. I mean, show you points in history where it has now played out this way. I'm just talking about more recent history. And look at right here. During last year, we had some volatility in January, but then we went higher into the March high there. We're getting some volatility here in January, February. Do we rally into March or on into April and then see this April to September, volatility with Bitcoin? And that could be suggesting maybe we rally with the tax cuts. And why has crypto been rallying? The crypto community, because Trump's pro-crypto, and so the crypto community likes him, pointing crypto-friendly people to his administration. It's going to rally here. And I think we're going to get this negative seasonality, and I think that is suggesting that we're going to see some kind of sell-off with the tariffs, as I've been predicting. So just something, and again, I don't. If you're, cryptocurrency is not your thing. If you're not into Bitcoin, it's okay. That's okay. But you should be aware of this. That's why I'm taking the time to show you. If you want to see a lot of really cool charts on Bitcoin, I've just been nailing the calls. My indicators have really been doing a good job nailing the turns on Bitcoin, using that information to help me to call the turns on the S&P 500. But I'll link my latest video on Bitcoin. Interesting. Even if you're not into Bitcoin, it will be helpful to you if you're just trading the market, because they have a positive correlation. Live it, love it, learn it. And I think that makes more sense than anything else out there being said. The S&P bounced around today. We ended up closing at a new high. We ended up closing at 6129.5 and moving above that previous peak of 6128 over here. You got a candle of indecision there on our last trade of dating on the short trading week, but then we got a hanging man candlestick. So do we still see a pullback? I think you're going to pull back and either get a higher low or a slightly lower low than the low here. Now, I think that talking about this low just above the VWAP support levels there, again, I talked about this low right here being a back test, which we did get. That's why I told you this low right here with the DeepSeek sell-off was going to be taken out. So let me remove a duplicate annotation there. Okay, but we came back, we back tested, and I told you this low is going to either be tested with the higher low, or we're going to take it out and bottom out below it, maybe at the 61.8 Fibonacci. That low held. But you got now a possible hanging man, so I think this low right here, the higher low that's set up, testing this low, I think that will now be tested. And remember, we gapped lower with the CPI data. Remember that? I told you we were going to come back and test it. The higher low or the lower low, well, we came back and we gapped down with the CPI, but then we got that higher low. And that was right around the 200 period on our 60-minute chart. The VWAP support here in the daily time frame. Now also, the 50-period moving average that we bounced off. So I'll be watching this possible hanging man to see if we start getting a bigger sell-off. Here's the 60-minute chart up nice and close so you can see it. Again, we had some volatility throughout the day, and then we pushed higher. We'll see if we push back into the trading range here now that we're at the upper end here and just closing slightly above the previous peak there, getting a possible hanging man on the S&P 500. Even if the hanging man plays out in the daily time frame, so even if we get a pullback, even if the hanging man plays out, and here's the hanging man close up in the daily time frame, you got a candle of indecision, then you get hanging man, or possibly a bottoming tail if this is a continuation doji, if we can clear this level. We're trying to break out ever so slightly above it right now. If we clear this level and we can stay above it and hold above it, very well could be a bottoming tail. But again, my guess is you're probably going to get a pullback. Be watching the support zone, the low here from our higher low that's set up after the back test, and the low right here. So we'll be watching these levels now. But a possible hanging man, if it does play out, you've got to close below today's low. And then, again, we'll be watching the low here. Today's price action on the 15-minute chart formed a little bull flag pattern that we broke out of towards the last 15 minutes of trading. And again, you can see a larger divergence develop here and still pull back, but did clear the previous peak. Now break above that level and hold above it and consolidate, or do we get a pullback? Regardless, listen carefully. Regardless, I believe we're going higher. The short-term price fluctuations might be choppy and we might get pullbacks, but the main movement is higher. So just understand that. And the divergence I'll be watching. The breakout to a new high is that maybe a bottoming tail rather than a hanging man, and we start, clearing this 6129 area, this peak 6128. We'll see what happens with the FOMC minutes tomorrow with the balance of the short trading week. Now, I'll show you what I have for the Elliott Wave count, but again, it is speculation. And again, we are inching up to a new high of our January peak here at 6128. closing about a point above it at 61.29. So again, this is what I'm watching right here, and I posted this on social media on X today chart, and again, we were consolidating here, forming that bull flag. I just showed you on the 15-minute chart, and I put going to get a pop up to new high and probably pull back or start to pull back. One of these scenarios is likely. Now, again, it could be another scenario that is possible, is that we push up to a new high, go higher and back test it. Again, Elliott Wave is speculation, okay? And again, the short-term price fluctuations can be easily invalidated. The bigger picture is we finish minor wave 4 over here. We have wave 1 here, our first subwave. Likely the second subwave has finished here with our back test. And now we've gotten this higher low. Again, I was calling for a higher low or lower low. I told you I didn't know which it would be. Got the higher low. Probably now into our third subwave. And again, getting a lot of chop and slop in here through the first, second, probably now the start of our third subwave for minor wave 5. So again, just some things I'm looking at. But if we do pull back, if our second subwave finished over here, we could be developing these smaller microwaves in our subwave 3. But again, just speculation here. Know that the main movement is up. It's possible that we pull back if we get rejection at overhead resistance. We'll be watching. Getting a lot of chop and slop in here. Again, we did bounce above our 200 period moving average. We'll see if we pull back with that possible hanging man. If the hanging man is confirmed tomorrow, then you can get a pullback. And if you do, I think this low will be tested. If we didn't finish a 1 and 2 over here, these smaller microwaves, our subwave 3, then maybe that's possibly still under construction here. Do you see what I'm doing? I'm making this go down, larger corrective process, but still our subwave 3, but just in the smaller subwaves. And then right here, if we did finish this smaller 1 and 2, then we're now getting this wave 3, and maybe we get a pullback for a higher low, and then boom, we start getting that extended wave. These are just smaller waves in the larger subwave 3, in the larger 5-leg push higher. So again, let the different counts overwhelm you. I'm just showing you because we're getting a lot of choppiness in here. Just showing you some different possibilities. Like I said, counts, Elliott Wave could be invalidated. I do think we're in minor wave 5. How we get to there remains to be seen. So just some choppiness really going on here. Hanging man gives us a pullback here on the daily chart. Does the breakout of the bull flag on the 15-minute chart just give us a continuation? And the resistance at the 61.28 area, our previous January high, then now that becomes support. So we'll be watching. It's really all about support and resistance. Regardless, I remain bullish. Yeah, we may get a pullback. We're still likely to go on and make new all-time highs, and we are now making new all-time highs as I've been predicting that we would. Again, I predicted we bounce off the January trend line, or bounce off the January low there, off the trend line, 2023 low, and fill the gap from the election. I told you you're going to get a rally, but then up here I told you we're going to get a pullback to backtest, and that's exactly what happened. So again, this is just building momentum, I think, to take us higher. Even if we pull back, don't lose sight of the big picture. The bigger picture headed to the upper boundary of the rising wedge. They're just short-term price fluctuations. Don't lose sight of the bigger picture. And again, this is likely going to take us, this rally is likely going to take us back up to this trend line from July, which is the upper boundary of a rising wedge. And again, it's likely going to reach these levels in late March or on into early April. And I think we're going to get the rally surrounding celebrating the delay of the tariffs and shrugging that off, hopes of the tax cuts, extending the 2017 tax cuts, and whatever catalyst may be along the way. But then you're going to get that inflation freak out up here, and I think that's going to happen. Here's the bigger picture. And again, if we zoom out of the 60-minute chart, you can see, again, I think we had minor wave 3 here, minor wave 4. Everybody was saying, oh, it's head and shoulders, we're going to go down. I told you we're going to bounce off the 100 period moving average, the trend line for 2023, and fill the gap from the election right here and continue the election rally. The election rally started here. We pulled back, and then we got that December high, and we pulled back here to fill that gap. We have a continuation of the election rally on what? Hopes of the tax cuts. Wall Street likes that, but they hate the tariffs, and then we'll sell off with the tariffs. In all likelihood, I think that's probably going to be the case. And then I think we'll complete the rising wedge up here. So I think you have these first couple of subwaves here, 1 and 2 with our back test. Now I think you're working on 3. And again, if we've had a breakout, maybe we just keep going. You can get a little bit of a pullback. You got a possible little hanging man candlestick. Again, I don't think that this low, I think that it's been the higher low that we had here at our 50-period moving average, I think is validated a higher low here. So I think this higher low now, above the January low, has now been validated, okay? And I think that low is likely now to hold. So we'll be watching this low now on any kind of pullback, or with the breakout, do we just keep going now? So we'll be watching, is that a hanging man or is it a bottoming tail? And our doji from late last week there, is that a continuation or a reversal here? So we'll be watching. Regardless, the bigger picture is, without all this chop, and you can see this choppiness in here from when we rallied up there to the January high. A lot of choppiness at the back test in here, but do we now just continue the momentum higher, breaking above this area now here, ever so slightly by 1 point? Do we now continue and maybe get a mild pullback and continue our way onward and upward in an extended wave 3, or do we pull back a little bit more and there's more work to be done? Regardless, going higher. I hope you hear what I'm saying. The short-term price fluctuations, that's for the day traders, okay? I'm looking at the swing move higher, the main movement.